and who could be next on the list. Joining me now is Bradley Tusk, co-founder and managing partner of Tusk Venture Partners. Early investments include FanDuel, Coinbase, and Uber. Bradley, good to see you. This market
John,
is
how are you?
volatile. I'm good. Better than the market, though sometimes feeling almost as volatile. Normally, that's not good for the IPO pipeline, right?
Yeah, I mean, I don't think it's great right now either. I mean, it feels like we've been in this sort of crazy period for the last year now of expecting the market to open up, expecting IPOs to start happening regularly, expecting M&A to really start flowing, and then something happens to pull it back. When Trump won in November, the broad-based sentiment, at least within the VC community, was two things are going to happen. We're going to have less regulation, less of an FTC putting negative pressure on the M&A market, and we're going to have lower interest rates. And the combination will finally allow companies to start having liquidity and VCs start having exits. And we haven't really seen that because of all of the chaos and all the uncertainty and the tariffs and DOGE and everything else. And so right now, for a brief period, it feels like things might be okay again. But when there's this much chaos, markets usually don't like that. And I have to say, I'm also worried that when you look at Trump's big, beautiful tax bill, you're going to take on that much debt, and you combine that with consumer price increases and tariffs, it really makes it hard for the Fed to cut rates. And the combination of the instability and higher rates is not great for the IPO market.
So, but for the companies that do come out, is this environment maybe decent? I mean, it's certainly not as heady as an environment that we saw 3 or 4 years ago when arguably things spiked so much that the comps have been tough ever since.
Yeah, I mean, look, so I've got, of the companies that you just showed on the graphic, one of those is our Circle. 2 more in the mix. StubHub has filed an S1, though we don't know exactly when an IPO would be yet, probably Q3. Kodiak is going public via a de-SPAC, and that's supposed to be in August. So, look, if you're someone like me or really any venture capitalist where there's been effectively no liquidity whatsoever for 4 years, you'd rather just have the IPOs move forward and see what happens. Also, keep in mind, for the inside investors like us, we usually have a 6 to 12 month lockup as well. So it's really effectively what the share price is upon expiration of the lockup, not upon day 3 of trading or whatever it might be. So yeah, I would rather see it all happen than not. But if you said to me, you're going to have a year of predictability, stability in the markets and lower interest rates, or another year of chaos, clearly I think every investor would pick the former.
How are you advising company leaders to navigate relationships with this administration, with government during this period? More transactional than I can recall seeing it. And things are changing pretty quickly. I mean, we thought a few months ago that Tim Cook was really good at dealing with President Trump, and now I guess that's in question.
Yeah, I mean, I think it really depends a lot on who you are, right? There are parts of this administration, by being so iconoclastic, that might create opportunity. I was talking to a super early stage startup in the health space yesterday, and they had this kind of weird idea. And I was like, you know what? With this HHS and this CMS, you might have a shot that you probably wouldn't have had under Biden. So you should move forward and try to figure out some ways to get to them and work with them. On the flip side, if you're Apple, I'm not sure that they should really just take this all lying down. A 25% tariff on the iPhone, if that were to happen, and Trump said today it would be Samsung as well, effectively means that every American, because keep in mind, a phone now is a utility. It's not a luxury. Something like 90+% of adults have them. Means that we're all paying an extra couple $100 a year because of this tariff, because of this tax. And if I were Apple, I would say, okay, I'm going to buy $300 million in TV ads going after Trump on this and anywhere else where he might be vulnerable, going after Republican candidates, going after Republicans whose votes you need on the budget, and everything else, and use your wealth and use your might to push back for 2 reasons. One, because I think, like a lot of politicians, when all of a sudden they see their numbers start to fall, their positions quickly change. And 2, Apple is a company that wants to be around and successful for a very long time. And it needs some of the basic tenets that make the American economy strong. Investment in R&D, investment in education, independent markets, independent institutions, be able to bring in the best talent from all over the world. And if all those things are being undermined, even if you manage to fight off something short term, you're still going to suffer long term. So I think Apple and a lot of companies, both their immediate needs and their long-term needs, if they are trillion-dollar companies with true wealth, I'm not sure that I would just go on bended knee to Trump. I think I'd flex some muscles.
Maybe we'll call that the Harvard strategy. We'll see if they do it.
Well,
Bradley
exactly.
Tusk.
Look, right now, John, if you could be Harvard or Columbia, you'd be Harvard.
Yeah, well, maybe. Bradley Tusk, thank you.
Thank you for having me, John.